1. Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXPesa. So thank you for joining the session. Today, we'll be looking at the top market news, or basically top market snapshots. And once we cover that, we go through the economic calendar. And of course, once we go through the economic calendar, we try to understand what are the major key market structures in our charts and where the opportunities could be lying for the day. So hello, Casper, and thank you for joining the session. So as for everyone else, once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. Awesome. Let's get things started. So I'll be starting with one, the economic calendar. So as you all know, Monday was largely a quiet day. We didn't have any major news happening. German BUBA monthly report and the consumer confidence from the Eurozone, which came in as expected. Then entering into Tuesday, we have the official S&P Global Manufacturing as well as Services PMI reports. So in early morning trading, we saw the reports coming in from Australia. So flash manufacturing slowed slightly, 48.0 from 48.7 the previous reading, whereas services also slowed to 47.6 from 51.8 a month ago. Then looking to Japan, manufacturing basically was reported at 48.5, which was the same level as the previous reading. But then looking at Japanese inflation, there was a slight increase to 3.4% versus an expectation of 3.3% and a previous number of 3.3% in the previous 1 month. Then we had the German GfK consumer climate, which came in at negative 28.1, slightly worse than expectation and also worse than the previous reading, meaning that the consumer climate or consumer expectations are getting worse and worse for Germany. Then the major highlight of this morning's data was the UK jobs market, where there was an overall expectation that the number of jobs created in September was 2.3K versus the previous revised number of negative 9.0K. So the actual outcome was 20.4K, which basically means that there was a rising number of people who are claiming for unemployment insurance. So what this basically means is that with more and more people claiming for unemployment insurance, there's this softening of the job market, whereas there was opposing data from the unemployment rate, which came in at 4.2%, slower than the previous reading of 4.3, and of course, lower than the expectation. So it was a conflicting report where on one side, the number of people claiming for unemployment insurance is increasing, but then the unemployment rate is reducing. So later on, we saw the European French flash manufacturing PMI coming in slower than expected at 42.6 versus 44.4 expected and 44.2 previous number. And then 46.1 in services, which was slightly higher than the previous reading and higher than the expectation. So for Germany, 40.7 for manufacturing, a slight improvement from a previous 39.6, and of course, better than the expectation of 40.1. Of course, for German services, they slowed down 48.0, jumping right into contraction territory. So remember, the way you interpret these indices is that if the number is below 50, it's contraction. And of course, if it's above 50, it's expansion. So for German services, they literally just jumped into contraction territory, whereas manufacturing has been holding into contraction for quite a period of time. So we had a speech from RBA Governor Bullock. Then the overall European flash manufacturing PMI came in weaker than expected at 43.0 versus 43.6 expected and 43.4 previous number. whereas services PMI came in at 47.8, which was slower than the expectation of 14.7 and the previous reading of the same, meaning that both services as well as manufacturing are basically weakening in the Eurozone, and this is not good for European equities. So later on at 11:30, we will be looking at the same data, flash manufacturing and services PMI for the UK. We'll also be getting the same data for the US, and this will be happening at 4:45 p.m. So in between, we'll also be having more data. There will be CBI industrial order expectations for the UK at 1 p.m. National house pricing index for Canada at 3:30 p.m. And of course, a speech from ECB President Lagarde, and this will be at 3:30 p.m. So Christine Lagarde is due to speak in a pre-recorded video at the hearing on women in finance and economics before the European Parliament in Brussels. So besides that, we'll be having the Richmond Manufacturing Index for the US at 5 p.m. And that will mark the end of the reports for the economic calendar for the day. So tomorrow we'll be starting on quite a high note where we look at the inflation report from Australia, which will include both the CPI quarter over quarter and of course consumer price index year over year data. So annual inflation is expected to slightly increase 5.3% from the previous reading of 5.2%. And if the number is higher, then it could add pressure on the Reserve Bank of Australia to continue tightening policy, which would be quite positive for the Australian dollar. But then if inflation is lower than 5.3%, then it would mean there's less pressure on the RBA and it would be negative for the Australian dollar. Then we'll be looking at Credit Suisse economic expectations for Switzerland, then German IFO business climate at 11 a.m. And then later on, we'll be getting the most important news for the day, which will be the interest rate decision by the Bank of Canada, which will later be followed by the Bank of Canada press conference at 6 p.m. So we'll also be looking at the ECB President Lagarde, also issuing another speech tomorrow. And of course, the Fed Chair Jerome Powell will be speaking at 11:35 tomorrow. So it's quite an action-packed week. And also it's important to note that over 30% of the companies in the S&P 500 are currently reporting their earnings this week. So among some of these earnings is the Magnificent Seven, or the top 7 stocks, especially in the tech sector, that have been leading the current bull rally by contributing over 90% of the gains in the NASDAQ 100 index. So these stocks are basically the top tech companies, and 4 of them are reporting this week. We know Alphabet or Google is reporting this week. Meta Platforms or Facebook is also reporting this week. We'll also be expecting earnings from Microsoft as well as from Amazon. And once we get 4 out of the 7 companies in the Magnificent Seven, then we'll get an overview of whether the AI boom or the AI rally will continue or whether it will slow down. So that's a key important thing that a lot of investors are thinking about right now. So if you have any questions or suggestions about something we should cover for the session today, feel free to type that in the live comment section, and I'll be ready to answer that as we progress. So hello, Apollo. Thank you for joining the session. I don't know whether you mistyped my name or is it just a joke. Hi, Agnes, Owen, Richie. I can see Quacks in the house. Vargo, Kenneth, Robert, Brian, and Methodius, which kind of displays weird ratio. A lot of men in the house. Don't know where the ladies are today. So let's get this going. On the charts, there's quite a number of things that have happened since the open of the week yesterday. So one benchmark thing we always look at is the dollar index. So yesterday we had mentioned that the dollar index was basically in this range that was holding for the last 4 days. So we were monitoring the lower trend line here, and eventually in the afternoon, the dollar index managed to break towards the lower side and kept going all the way down to the previous support here, the area marked by the blue trend line. But then once it got here, attempted to break lower this morning, but then we are seeing a very strong rebounds. where all the early morning losses were erased by just one candlestick, which basically implies that the dollar is now strengthening today. And this could be an idea for the trading for the rest of the day. So after the big sell-off yesterday, dollar bounces off this support, and now there's a good likelihood that this support holds and dollar continues trading higher. So with this in mind, we know that currencies that were gaining against the dollar are now reversing. With the pound, we were monitoring this major trend line here. So as I had mentioned in the session yesterday, you monitor to when the price gets, the price of the pound USD gets to this level of 1.21911. So when it got here, it was a clean break, implying some further upside. So the market kept going up for the rest of the day, and of course, early this morning. And now we are seeing these reversals beginning to shape up. So there is a good likelihood we could be seeing the pound begin to take a step backwards as the dollar continues to strengthen back. So as for the USD JPY, I mentioned that this chart has been quite bullish for some time. I expect some further bullishness, especially considering the wide divergence between the two central banks. And now we also have to be very careful of the Bank of Japan potentially intervening in the markets. So yesterday we saw the market hitting a high of 149.992. And we know that when the last intervention happened, the USD JPY pair had hit 150. So now that we saw this big sell-off, and of course early morning sell-off today, and the dollar is now strengthening backwards, then this pin bar becomes more relevant today as it touches on a major support level for USDN that we once saw some time back on the 16th of this month. So having seen this strong rejection basically implies there's still some room for upside, where as the dollar strengthens, it also strengthens against the yen, and we could be seeing price getting back to higher levels of potentially 149.698 and of course 149.992. So very short-term price action here, and if we get here, we could also retest the previous high here. So that's an idea for the day. Of course, for Euro USD, there was a big rally. We go to the previous resistance level, sorry, support level, now turned resistance. And when the market got to this particular trend line, immediately there was a big sell-off, and this happened within this range of the the last 1 hour. So we know that the euro has the strongest weighting in the dollar index. We basically compare the dollar against 7 other currencies, with the euro getting the highest weight because it's the most most highly traded currency against the dollar. So in this case, now that we are seeing a big sell-off happening here, then we could be seeing the euro continue to move downwards to a level of 1.06160. And if this plays out, then we could see some further weakness in the dollar for the rest of the day. So this is a currently potential trading opportunity. And of course, as we head on, we look at the USD card, we can see that the dollar managed to find resistance here yesterday and pull back downwards, attempted to go up and kept going down. And now it's finding some form of support in the last 1 hour. So there is that potential that the dollar could continue gaining against the Canadian dollar, and of course, potentially test 1.37102. So most interesting asset right now is gold, which has been on an upside for the last 2 weeks. So in the last 2 weeks, it opened with a gap here, jumping to 1845. This is during the weekend when Israel was attacked by the Hamas. And then the following acceleration of the conflict between Israel and Palestine led to a lot of safe bets, basically investors running away from risk and putting their money in gold, leading to this acceleration. The market closed at a high of 1927.35. Then last week, market attempted to go back and kept going up and managed to close at this area here at around 1980.76. So on opening the markets this week, we can see some form of a pennant being formed, or a consolidation zone in the form of a triangle where the market opened, went down and then up and closed here. They went up and then down. And now what we are seeing is a consolidation that is potentially about to break. So for you as a trader, you are monitoring the breakout location. So in this case, if the breakout happens to the lower side, then you potentially go for a lower short selling position. And of course, if the market bounces from here and eventually breaks to the upper side, then you basically go for a potentially bullish position. So judging from what we are seeing from the dollar index and the strong acceleration here, then there's that likelihood that gold could break out to the lower side, and that would present a nice shorting opportunity. So as for AUD/USD, a very strong bounce here, and then an acceleration today. So we are basically headed for a potential resistance area. So we already broken this high that we saw 3 days ago. And by 3 days ago, I basically mean that's the last week. So I'm not implying that the weekend is included. So having broken that's the last week's high, then we are headed for Wednesday last week's high, which is 0.63884. So there's a good chance that AUD/USD could potentially retest this area here. So most important asset of the week is the US equity indices that basically managed to complete a swing from the upper trend line down to the lower trend line, which was the previous support. And now a very strong bounce happened yesterday. So you can see the way the market got to this area and eventually bounced up for the NASDAQ. So from the 1 hour chart, this is how it looks like. A bounce followed by a retest, and the market goes all the way up. And then today, you can see the momentum has significantly slowed down. So the outcome of the earnings reports that will be released today could have a significant impact on the direction of the US Tech 100 or the NASDAQ. So if we see much weaker earnings, then it would mean we continue seeing bearish momentum. But then strong earnings would mean that the market now makes a swing towards the upper trend line. So it's all about the earnings, less of fundamentals. And of course, we also have the S&P Global Flash Manufacturing and Services PMI. So if the two data points basically indicate a strong US economy, then that would be positive for the NASDAQ 100, and it could fuel it to recover all the way back to the previous trend line. So as for the S&P 500, it was a similar price action. So the market basically finding resistance around this area. This was slower than the NASDAQ. Remember, the NASDAQ touched this trend line, but the S&P 500 did not. So if you go to the NASDAQ and you go to the 4-hour chart, this is the trend line I'm talking about. The NASDAQ was able to touch here, but the S&P 500 turned before getting here, which basically means that the bearish momentum is strongly strengthening. So now, seeing that the market has bounced from this area here, if we see much weaker earnings, then we could be seeing some further downside acceleration and perhaps the market retesting yesterday's low. But then a very strong S&P Global Manufacturing and Services PMI could potentially lead to a rally that would accelerate this pair back to the previous high. So a moment. Awesome. So the weakest among the indices has been the Dow Jones. The Dow Jones has been the weakest index all year. So as you can see, this previous high has been forming lower highs. And of course, for the lows, they are now getting lower and lower. And all we are seeing is an acceleration of the bearish momentum. So with the Dow Jones being unable to form higher highs, then there's that potential that it could keep going down. So yesterday, the two top indices managed to touch their previous lows. You can see the S&P 500, you can see the US Tech 100, but the Dow was a little bit slow. So today could be the day that we see the Dow finally going for it and getting to touch this area here. So a very important area of interest will be the $32,812 per share of the Dow. So as for oil, we saw a really nice opportunity here of potentially buying in this value area here. So when the market got to the trend line, changed and moved higher, it was a really nice technical opportunity to go along. But then my analysis was wrong. The market did not play out as expected. So we saw the market eventually breaking the lower trend line and trading lower. And now we are seeing the market trading around this area and potentially attempting to move further back downwards. So with now the original thesis nullified, we start now trading in the opposite direction since the trend line has been broken and now the market is looking to form lower lows. So potentially a nice target will be 88.323. And there's a couple of developments fundamentally that have led to this. And one of them is the Venezuela issue. So I don't know if I have that data here. Yeah, so here is the short-term report explaining the issue of why oil prices are going down. So Brent crude futures rose above $90 decline as concerns that the Israel-Hamas war could lead to a wider conflict in the Middle East and disrupt oil supply resurfaced. Israel continued its bombardment of Gaza on Monday as other countries conducted diplomatic efforts to contain the violence in the region. So oil prices also remained supported by expectations of a wider market deficit in the fourth quarter after the top producers, Saudi Arabia and Russia, extended supply cuts to the end of the year. Meanwhile, the US broadly suspended sanctions on OPEC member Venezuela after Venezuelan leaders agreed to hold fair elections next year. Investors now look ahead to industry and government reports on crude oil inventories to gain insight on the supply-demand picture in the world's top oil consumer. So what we have seen with the S&P global manufacturing as well as services PMI, we have seen a weakening European economy, which means lower demand for oil in the Eurozone. Now we'll be looking at the same data for the US later in the day. And if there's a weakening manufacturing and services PMI in the US, that would potentially lead to weaker oil prices. So at the same time, looking at this new development, that sanctions on Venezuela are being lifted, it basically means that Venezuela will be able now to export oil to to the US and other allies of the US, and these will increase the oil supply, leading to suppressed prices. So this may explain the current scenario we are seeing with oil changing direction. So in this case, an oil market that was extremely bullish, moving from 83 all the way to above $90 per barrel in the last 3 weeks. That is 92.48 or 50 around there. Then pulling back downwards, and now we are seeing a market that has formed a significantly lower high. So notice how oil prices were moving up. We had this double top formation. Price moved back downwards and then narrowed, but now the most recent high is lower than these previous highs, meaning that the trend may be changing now. So in this case, it's in order to think of short selling bets. And one of the short-term target is 88.323, and we could also get to 87.477. So European equity indices have been on a bearish momentum. Yesterday in the evening, they attempted to make a recovery, but closed much lower after that. And then today, we are seeing the French 40 index also making an attempt to rally, but then this attempt doesn't seem at all genuine. It's not something that would be so strong to believe in. You wouldn't believe that things are now changing for the French 40 index. Now it's strongly bullish. It shouts more of a consolidation before we know the next move in the markets. So it's more or less like investors are waiting to see what will happen before they react. So in this case, monitoring these two trend lines would make a lot of sense rather than believing that this is a complete reversal. So as for the Euro 50 cash index, there seems to be some formation of some reversal pattern, which looks like an inverted head and shoulder pattern. For those who are not familiar with this is how it looks like. The market is on a bearish momentum, forms the first shoulder, then gets back to the neckline. So the blue trend line here is what I'm describing as the neckline. Then it makes a sharp drop, which is then responded by the opposite move. Market makes a very strong recovery after the sharp drop, and then it goes back downwards for another shoulder. Now indicating that the market is forming higher lows. So between this low and this low, it's getting higher, whereas in the initial move, the lows were getting lower. So in this case, we monitor the breakout above the trend line. In that case, it becomes our bullish signal. So when the market got to this area, you can see the sharp drop right after that. And now we wait patiently to see if there will be eventually a break towards the upper side, which would present a buying opportunity. But for now, it's a wait and see kind of scenario. So it's also on the big news that Bitcoin has made some good rally over the last couple of days, currently hitting a high of 35,270. So in the last couple of minutes, we have seen Bitcoin make a pullback and then attempt to go higher as investors speculate that the BlackRock Bitcoin spot Bitcoin ETF will be approved within the week. So in this case, we are seeing a very strong momentum. And of course, it's also in correlation with gold. So it's basically a run for safety. So a lot of investors are taking a flight for safety as they fear that the geopolitical conflict in the Middle East could continue spreading. And in this case, you might want to have some cash stacked away rather than holding your money in risky assets. So in this case, we are seeing some good momentum happening for Bitcoin, being up over 7%. So lastly, USD CHF or USD against the Swiss franc managed to be on a very strong bearish momentum for the last couple of days. So having peaked from all the way up, this is 0.92429. I kept going down, but then there seems to be some very strong support around this area here, which held on Friday as well as yesterday on Monday. And now you can see the market attempting to make a very strong bounce from here. So this basically means that there's a good chance we could be seeing a rally happening from here. So as the dollar continues to recover, then the USD against the Swiss franc might be the simple idea you're looking to trade. So you might want to consider this and do some further research on it. So as usual, these sessions are not financial advice, neither are they recommendations to trade. So always do your own research, your own due diligence, and practice risk management at all times. So weak economic news ought to cause central banks to pause or drop rates. However, this is not the case, especially for Fed and European central banks. I think there is a higher likelihood the Fed will hold interest rates at the current level on its next meeting this week. I think the Fed meeting will be on 30th of this month. And there's a good chance that the Fed will hold interest rates. And that might explain why we are seeing people shorting the dollar. Treasuries will face the most severe impact from Governor Kazuo Ueda shifting away from a super accommodative policy. Declines in the dollar may add to the misery. How will this ramify the markets? So currently, Japan is becoming a politically hot environment, considering how much their currency have been losing and their imports have become expensive. So currently, they have been waiting for evidence of sustained wage growth, but then that wage growth is stagnating. So at some point, something will have to crack. And if what cracks is the BOJ Governor Kazuo Ueda, then we might be seeing the Japanese economy cutting the stimulus packages in preparation for a potential rate hike, which could be happening in 2 years. So for now, what we are seeing him considering is dealing with the immediate problem in the bonds markets where yields are rising. And since we have already seen over the progress of this year, the current limit on the yield curve program basically being moved from 0.25% to 0.5%, and then another double move from 0.5% to 1%. So we could be seeing that limit for the yield curve control being expanded. And that if that gets expanded, then we could be seeing some further weakness in the yen against the dollar. We wait for earnings report. Can you comment about the rumor? Of course, the rumor is that potentially the top stocks that are currently driving the AI market are basically facing some much weaker performance for quarter three. So if we see weaker numbers for quarter three, then that would probably set all hell against all US equities. So in this case, if those top 4 companies are not able to maintain their current earnings rate or beat earnings, then there's a good likelihood we'll be seeing a big sell-off in the Nasdaq. So what time do we expect the earnings reports? I think You can check on the NASDAQ on the S&P 500 website. Can literally just search the NASDAQ website and then check the earnings calendar, and you'll see the exact timing for each earnings report. So let me try and share this. So this is the earnings calendar on the NASDAQ. So you can see that this will be 25th, 10, and Microsoft will be the first to report. I think the time is not indicated as time. So it's only indicated as either evening or in the morning. So in the evening, it basically means at market close, and in the morning, it basically means at market open. So for instance, Coca-Cola, Novartis, and Danaher will be reporting at market open, whereas Microsoft, Google, HSBC, and Visa will be reporting at market close. So market close is usually 11 p.m., whereas market open is usually 4:30 p.m. So I'll be sharing the link so that you can follow with this on your own. Ten-year Treasury yield is the centerpiece of the global financial system and helps set prices for all kinds of other loans and investments. Expound on this statement. For instance, think about it this way. If you're a bank in Kenya and you want to lend some money to a company, you have a couple of options to consider. So if you put this money in a 10-year treasury in Kenya, there's that rate that you're getting. I think it's around 14 to 16%. So will that business be able to pay higher than that amount? So it basically sets the price of money. So whenever we talk about 10-year treasury yield, then we're basically talking about the price of money. So higher US bond means weaker equities. Is this the case? Whenever the yields are getting higher and higher, then it basically attracts more people to buy the short-term equities and less on equities. Short-term treasuries and less on equities. So what this basically means, rather than looking what a person may choose, you are trying to learn the market psychology. So if more and more people are buying bonds, the yields tend to rise. And in that case, it means that they have done their research and they understand that there is prevalent risks in the equities markets. So you can understand the flow by tracking the yields in the bonds market because they reflect what people are doing. Yes, falling yields will definitely lead to a weaker dollar. What would be fueling USD CZK pair volatility? I haven't checked that. Apologies. Beginner Zoom link. Just go to the FX Pesa YouTube and then look for the Novice to Pro series. So thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. So remember, today we'll be having another session, and it will be happening at exactly 4 p.m. as we focus on the New York market open. So stay tuned, subscribe to the channel so that you'll get notifications when the video goes live.